It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by firsthourtrading.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we're going to be looking at Citigroup and the financial sector. The CEO of Citigroup recently resigned, and it was an abrupt resignation. What does that mean for Citi and for other stocks in the banking sector? We'll take a look in this video. Vikram Pandit was the CEO of Citigroup. He abruptly resigned on October 16th. This was just one day after Citi announced its quarterly earnings results. And at the conference call, Pandit was upbeat. Estimates for the current quarter were revised higher to plus 116%. Still, Pandit clashed with Citi's board members, and he and his right-hand man, the CFO, John Gersbach, quit the firm after one final clash with the board of directors. Pandit did preside over Citi as it lost a staggering 89% of its market value. But even the staunchest Pandit critic couldn't give him all the blame. After all, Pandit did take over at the very start of the financial crisis, and he did manage to improve Citi's operations enough to pay back the government aid that the company received. However, shareholders revolted over executive pay. Pandit received an average of more than $10 million per year for his 5 years at Citi, even as stockholders suffered. Remember, they lost 89% of the company value. Furthermore, the Federal Reserve, which was granted additional power to regulate Citi after they took money for the bailout, the Fed rejected Pandit's plan for an aggressive share buyback program, and this came after Citi failed a stress test. The stress test was prompted by Pandit's request to the Fed to buy back the shares, and the board of directors were just outraged that Pandit would make that decision if there was any chance of them failing the stress test. So this was another point of contention between Pandit and the board. Taking over for Pandit is Michael Corbett. He was previously the CEO of the Citigroup Europe, Middle East, and Africa division. Michael O'Neill is the chairman of Citi's board of directors, and rumor has it that he had asked Corbett if he was ready to become CEO earlier in the month. And by October 15, the day before Pandit resigned, Corbett was already in New York. It looked like the writing was on the wall. The board now has its CEO, the CEO that the board wants. Is that going to be good for the stock? Let's take a look at the immediate impact Pandit's resignation had on Citi's share price. On the 17th, the day after he resigned, the stock mostly held the gains that it made the day before on the strength of that earnings report. Firing the CEO did not make a splash on the stock price. But since that time, Citi has been trending lower. This shows that for all their misgivings about Pandit, shareholders and other traders are not thrilled about the disruption caused by replacing the veteran CEO, and they're not thrilled necessarily about the board's selection of Michael Corbett as the new CEO. From a valuation perspective, Citi looks pretty good. Its PE and price-to-book ratios are better than both the industry averages and its own 5-year averages. Its price-to-sales ratio is in line with the industry average, and its dividend yield is better than its own historic average. Only in terms of price-to-cash flow does Citi have a trailing multiple that is worse than the industry average and its own 5-year average. And this may be a problem. Price-to-cash flow is important, and in terms of price-to-cash flow, Citi is overvalued by at least 53%. Citi by the numbers. Now, earnings per share were down 26% last quarter, but are estimated to more than double this quarter with 116% growth. That means 116% growth compared to the same quarter last year. Citi has averaged 40% annual EPS growth for the past 3 years, even though that number is projected to fall to less than 10% growth this year. Also on the downside, Citi has an annual return of equity of just 6.7%, and its debt is nearly twice its equity. Most troubling of all, Citi is just 5% off its 52-week high mark as of the recording of this podcast. Let's compare Citi to two of its competitors very briefly. Here's a 6-month chart of Wells Fargo. On the positive side, Wells isn't anywhere near its 52-week high, unlike Citi, but on the downside, the stock's trajectory looks quite bearish. It's below its 50-day moving average line, and it looks to be riding its bottom Bollinger Band lower. If anything, Wells Fargo looks like a short. JP Morgan doesn't look as bad as Wells, but it has recently fallen below the midpoint of its Bollinger Bands, and it is closed lower for 4 consecutive days as of the recording of this podcast, after hitting a new high in the previous week. This stock looks bearish too, a hold at best. By comparison, Citi continues to look strong. I suspect the stock will sell off for a bit more, first due to general market conditions, but it could be a bargain at the right price. After all, consider its price to book ratio. Even with all of its debt, Citi has a sub 1 price to book ratio, which means it's trading at a discount to its net asset value. If the price can come down a bit to get that price to cash flow ratio under control, Citi could be a good buy. I like it at $34 per share or under. I'll set my first price target at plus 8% with a negative 8% stop loss. I'll sell half my position when I hit my first target and then raise my stop loss to my original entry price. I'll then let the other half of the position ride, raising my stop loss so that I never lose more than 8% from the highest point the stock reaches while I hold it. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.